All right, what's up, Tycoon? Super excited for today's video. This was a viewer request, okay? So we're gonna kick it off by starting and saying that. All right, so leave any ticker requests in the comments below. Leave any strategies, tutorials, walkthroughs, anything like that you guys want me to do. Make a video on. The more specific, the better, so that way I can truly tailor to your needs. Okay, you guys are the audience. I'm here to make videos for the audience. And that's what I'm here to do. Okay. So we're going to start off looking at the 3-year weekly chart. Okay. And look here, guys. Okay. Over the past 1,017 days. Okay. 1017 down 99%. All right. So definitely not telling you guys to throw your life savings into this. This is not financial advice, but we are going to hop right into it. And I'm going to give my unbiased technical analysis and break it down for you guys right away and give you guys the most interesting things. The first thing we're looking at is this gap right here on the chart. Okay. There's a massive, not massive, but there's a very big gap up on the weekly chart. Okay. From 160 to about 190, 185, that area right there. If for some reason, let's say maybe a reverse stock split or something like that, the reason the price of this was to rally up this high, I would definitely look at that. It's offering some really great returns. It's at $2 right now, but that only happens about 90% of the time. This most likely will be the 10% that it does not fill. Okay, just being realistic. If we zoom into the daily chart, we can look here and let's go ahead and zoom in right now. Okay, I'll give you guys an example of a gap filling on the chart. Okay, here we have a nice gap. All right, if we zoom in even more so you guys can truly see. Okay, what I mean by gap is this candlestick and this candlestick, okay, consecutive candlesticks. There's a gap in between the area from this one and this one. These fill 90 to 95% of the time in the stock market. All right. And what do you know? This one ended up filling, not too much afterwards. Okay. About 6, 7, 8 days after the gap initially was created. All right. Um, so we'll go ahead and zoom back out. All right. And these are the Fibonacci levels that I gave you guys on the last video. All right. And I explained that if we would have, we basically took our swing low, okay, up to our most recent highs right here on this candlestick. All right. We'll get rid of this drawing now because it's irrelevant. Okay. We took our lows to our highs, and I said if we would have bounced here or we would have bounced here, this would have signified a continued strong uptrend, right? Now, the only thing different from my last video is that we have Bollinger Bands on the chart now instead of the simple moving averages, okay? And Bollinger Bands are going to really explain to you, when something is breaking out, and it's going to let you know support and resistance levels that, are invisible to the naked eye without it, right? So that's the main reason that we use them. Okay. Clearly, we can look here and we can see that in a period from here to here, okay, we went 187% in less than a month. All right. In 26 days. Obviously, that's a massive rally. What happened? We went from trading outside the bottom Bollinger Band to having a breakout and trading above and opening and closing above the top Bollinger Band. Okay. And that lets you know that we're in a strong uptrend, a strong market. And then once you come back down, you tend to bounce off the bottom Bollinger Band, okay, and rally, back up towards the middle or the top Bollinger Band, okay. So it kind of gives you an idea or just a general area, right, of where to start preparing, and where to, get an idea of where things might bounce. Okay. Now, one thing I didn't go over in my last video was the golden pocket. Okay. And that's why these ones are yellow right here. The reason they're yellow is because this is our golden pocket. And if you notice here, okay, we look at our most recent price action from the most recent trading days. Okay, we come back into the golden pocket, and anytime we dip below, we hit our Bollinger Bands, and there's so much demand. Okay, in between about $1.30 up to $1.50. Okay, right up there along our golden pocket. There's so much demand that we do not stay below our golden pocket at all. So we barely dip below it. Okay. We basically essentially trigger some stop losses, all right, because that's what market makers do. All right, they look and they know that people are looking to buy the dip at the golden pocket, right? So what are they going to do? The first day, they're going to say, okay, we're going to come down to the golden pocket, and the first buyers, we're going to have them continue selling. We're going to trigger all their stop losses. Second day, we're going to open up just underneath it and have everybody buy it, but we're going to dip below and then just close right at where we opened. Okay. And but there's so much demand, there's so much buyers right around this golden pocket that's why we consolidated in this period. Okay, and we had a nice box consolidation. Okay, that's something we went over in my last video. All right, so we'll go ahead and draw a little box here. Okay, and even I would say, you could this whole area could be your box consolidation. Okay, but we'll go ahead and just demonstrate right here. All right, some box consolidation. We'll make this gray real quick. Okay, and as we said, there's 3 stages to a reversal. Okay, there's your downtrend, all right, and then there's your box consolidation where you go up, down, and you consolidate in this area, and then there's your uptrend. So we've clearly started the uptrend. Okay, and we are above our 50% retracement level on the Fibonacci levels that we just went over. Okay, so what does this mean? That means that we're halfway through this level. So we're going to be facing some very strong resistance at 38.2 and 23.6. The reason being is because we know that there was lots of sellers present at this level the last time we were there. Okay, we can look here and, we fell very hard, very quickly. Okay, and when we blew past it, there was all these buyers. Okay, and then we just blew past these resistance levels, and when we came to test them as support, there was none of those buyers were present. Okay, so we're going to look to see if buyers are going to step in, okay, at 227, or is it going to be sellers? All right, are market makers going to continue this rally up, or are we going to start down? Okay, because look here. Okay, again, 3 stages. There's your downtrend, there's your box consolidation, and there's your uptrend. All right, so we have started a nice little uptrend. We are trading outside of the Bollinger Bands. Okay, we just explained and went over what the Bollinger Bands mean. Now look exactly where we closed today. All right, I'll go ahead and highlight it right here with a nice little oval. Okay, and we closed directly at the bottom, or we faced resistance right there at the top Bollinger Band. Okay, so very nice signs. Okay, we're breaking above the 50%, but we know that there's a super strong resistance level at 227. Okay, today buyers were able to push the price above the Bollinger Band. That's another good sign. Okay, but I am a little worrisome, okay, that we may be starting to see a potential top, because now we're starting to trade inside of the Bollinger Bands. Okay, if we can look here, and when the top Bollinger Band acts as a valid resistance level, all right, we start to push below it. Okay, that's what happens when we're closing right at it. We're closing right at it now. There is a potential we could be pulling back, but we do have a very nice strong support level at 203. Okay, so if you're in this play or you're looking to get into it, again, not financial advice, but you could get into it and set a stop loss below 203. Or depending on your risk tolerance, you could set a stop loss below 180 or 147. Again, that's your golden pocket. But we already went over how market makers work and how they like to manipulate the market and try to make buyers, or essentially trigger their stop losses. Okay, so let's say we know that people are looking at these levels, we're looking at them, we know that they're valid levels. They could drive the price down, okay, just to trigger everybody else's stop losses. And whenever you sell your let's say you bought in at 1.5, right, and you end up selling down here at 1.37, you know who the people are buying from you? They're market makers. Okay, and then they're coming up here and they're selling at the next fib level at 1.8. Okay, and they're selling to you trying to buy back in. And what do? Oh, well, you buy back in here at 1.8 because you see it rally and you think it's going to keep going, and then it comes back down to the fib level right here, right at 1.47. You get worried, you set a stop loss, we come back down below 1.47. Market makers have triggered your stop loss that you've sold. They're the ones buying it, and boom, again, it rallies, and they just continue repeating the process. Okay, so remember, it's a battle. All right, we are the little guys, but we can win if we know what we're doing and we're paying close attention. Right, risk management is key. So I just want to preach that. And thank you guys for watching. Okay, don't forget to like, comment, subscribe, and definitely leave me a comment letting me know what stock or what strategy you guys want me to make a video on next. Okay, thank you guys for watching.